Hey, what's going on, everybody? Welcome to your weekend briefing for the week starting May 22nd. In today's show, we're going to look at another busy week for earnings this week. After a slow couple of weeks, things have picked up again. We'll look at debt ceiling talks and some important economic reports we've got coming this week. We're going to look at the great rally we've had, but can it go higher? We've got a lot of charts to look at to answer that question. We'll look at some of the setups we've been playing, and we've even got a couple of new setups for you to look at. So why don't you go ahead and smash that like button. We put a lot of work in these videos, and it really helps us out. If you're wondering who I am, I'm Kevin D in the Discord, full-time trader, lots and lots of experience, CMT level 2 candidate, and investor community mentor since 2020. All right. So we do these videos to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders and investors, and members get to take part in our live streams and live mentor sessions. So check it out in the link down below. We'd love to have you come join us in the Discord. Here's a quick disclaimer. Everything we do here is for educational purposes only. We're not investment advisors, do not provide investment advice, and all trading decisions are your own and done at your own risk. All right, let's do this. We're going to get right started here with our earnings for the week. Starting on Monday before the open, we have NFLX. This has been in play a little bit. This has actually run up a fair bit into earnings. So this could be fairly interesting. After the close on Monday, we have Zoom. Of course, that's always very closely watched. I think that pet meds could be closely watched as well. Tuesday before the open, we have Lowe's. Now, we've already had Home Depot about a week and a half ago. So I don't know if there are any really big surprises here in Lowe's. But Home Depot, if you remember, dropped quite a bit on their earnings, which weren't ideal, but they actually bounced back quite nicely. So it should be interesting to watch Lowe's here. Dick's Sporting Goods, another one that's closely watched. And you can see there's a few more here. We've got a lot of retail this week. Last week and this week, all about retail, really. Or you know, a big chunk of what's going on is retail. After the close on Tuesday, Palo Alto Networks. We've seen a lot of stuff going on in the semiconductor space and also in the cloud computing space. So, a lot of this to do with AI, of course, as well. So that should be interesting. Palo Alto. Intuit will be interesting because they took a bit of a dump on news that the government was going to be, or the IRS was going to be doing some sort of free tax filing system. I don't know. I don't pay much attention to the IRS because I'm Canadian, but that was the news. It took a dump on it, and now they've got earnings. So it's going to be pretty interesting, I would think. Toll Brothers, one of the home builders, also on Tuesday after the close. Analog Devices, more semis. On Wednesday before the open, Kohl's, retailer. And then we've got the beginning of the Canadian banks. So starting with Bank of Montreal, Wednesday before the open, and Scotiabank as well. NVIDIA, Wednesday after the close. Well, of course, this is important. NVIDIA and AMD have really... aside from Microsoft and Google, of course, these guys have done great on this sort of AI hype. So it'll be really interesting to see what NVIDIA has to say, listen to their call perhaps, because I think that NVIDIA and AMD as AI plays are potentially really strong. Snowflake, always of great interest to the retail crowd, and some other names here too that will be interesting for retail. Best Buy on Thursday before the open, along with Dollar Tree, and then another big Canadian bank, TD Bank. You're probably familiar with TD Ameritrade. This is the big Canadian bank that owns TD Ameritrade. And you can see some other Canadian banks and retailers as well. After the close on Thursday, we have Costco, very important company, in the markets and the economy. This will be closely watched. Ulta Beauty is one that's a favorite with traders on their earnings. This is often quite volatile on earnings, so traders love that. Marvell, more semis, Workday, Also on Thursday after the close could be interesting. Big lots on Friday before the open. That's about the only one on Friday morning that's of any interest. So there you go. After a slow couple of weeks, with things slowing down, we really kind of ramped up again here. But this is sort of like, this is the last sort of surge before things start to really wind down at the end of earnings season. All right, moving on to the macroeconomic scene. On Monday, no reports on Monday. However, just before I recorded this, I was putting this together, some news came out that Biden and McCarthy had productive talks and are going to meet in person sometime on Monday. I couldn't find time for that or anything, but apparently they're going to be meeting in person on Monday. Things kind of fell apart on Friday. And I was ready to be all bearish coming into this video. I'm still not entirely bullish. We'll get into that a little more later, but everything right now hinges on these debt ceiling talks, and this is the week that something's got to happen, right? Because we're going into a long weekend next weekend. Monday is it the 29th or something? Anyway, a week from Monday, markets will be closed for Memorial Day. And I think that if they don't get something done by the end of this week, I think the market is going to say, hey, you guys should have got something done. I think we could see a harsh pullback, but we'll get into a little more of that detail shortly. Tuesday, flash manufacturing and services PMIs. These are important, especially the services PMI. PMI stands for Purchasing Managers Index, if you didn't know. And these are closely watched and important numbers to see how the economy is doing. Wednesday, we have the FOMC meeting minutes from the last FOMC meeting. These can often cause a lot of volatility in the markets, but I kind of wonder how much, because we've had these Fed heads, I don't know, there have been like something like 30 press conferences since the last FOMC meeting. So I don't know if there can be anything new to come out of these minutes. So it may turn into a non-event. However, these are often met with a lot of anticipation by the market. On Thursday, we have preliminary Q1 GDP. Now we've already seen the advanced number. There's three of these reports come out about 2 weeks apart, 2 or 3 weeks apart from each other. This is the middle one. So we've already had the advanced number. This may change a little bit. It will be closely watched, but if it comes in line with expectations, don't expect any movement out of the market. We also have, as always on Thursday, the important unemployment claims numbers. And Friday we have a big one. This is the PCE price index. This is the Fed's and Jay Powell's favorite inflation measure. He likes this, they like this better than the CPI. So PCE, closely watched. We need to be watching this. And also durable goods orders. That's a fairly important one as well, but not anywhere near as important as PCE. PCE is the big one for the week. Other than Biden and McCarthy going to meet on Monday. So there you go. That's what we got coming up this week. Let's take a look at our markets here. We're going to look at major indices, international markets, important commodity sectors, setups we're watching, and new setups. Let me pull up a chart here of the S&P 500. This is a SPY ETF. Look where we are. When's the last time we were up here? That would have been August of 2022 on the S&P 500. Been a long time since we've been there. Now, this is this is a really important resistance level here, and you can see that we're now halfway into a gap that goes back into August. There's a fair bit of there's another gap overhead there. But, that we've come up here, we've broken out of this consolidation. This consolidation was more than a month long here, about a month and a half long in this consolidation. Broke out the top of it. We had 2 really nice days here. And what's really interesting, we've got sort of this wider consolidation, but we really started to tighten up in here. Look how tight we got. And then we had this nice range expansion breakout from this tight little consolidation here. This is great. 2 really good days, good follow through on the second day. That we stall out here on Friday doesn't surprise me one bit. And considering the reason we stalled, that it didn't just pull way back at least to this trend line, is a little surprising and shows surprising strength. And also a little worrisome. So we pulled back because the debt ceiling talks kind of fell apart on Friday. And like I said, you would have expected to see this pull back quite a bit more than this, and it didn't. So is the market not really caring? Is the market kind of understand that, look, this is just political theater, this is what they do, and eventually they will come to a deal and everything's going to be fine? I would say, yeah, that is the way the market is thinking right now. However, the closer we get to a deadline and the closer things get to default, and more importantly, if the Treasury Department or Congress even starts taking measures to prioritize which bills get paid, that's when things start getting a little scary, because that's when the reality of potential default starts to set in. And I think that's when the market is going to punish these guys and is going to send them a message saying, hey, get it together, get a deal done. It's also possible, and what happened in, I believe it was 2011 when all this happened, the S&P downgraded U.S. Treasuries and U.S. debt, and that caused a spike in interest rates and the spike in the price that the U.S. government was paying to cover their debt. So it can get messy, and it can be dangerous for the economy. So we can't take our eyes off of this. But it's all right now anyway, not as bad as the media, some of the media is making it out to be. Right now it's all just political theater. I firmly believe they will come to a deal, but I also believe that if they take too long, then the market will pull back harshly. Now, they're meeting on Monday, so I mean, as we come into this weekend, I thought, okay, unless we have some news, then we are probably pulling back a little bit. And I thought that maybe we might pull back for a couple of days, maybe look and see how some of these catalysts are affecting, the economic report catalysts are affecting the market. But I didn't really expect we would pull back any farther than this trend line, and probably not really any farther than the top of this basing area that it broke out of. And then by the end of the week, they probably come to a deal and everything's good, and then we can take off and we can really start moving here and probably come up into this 428 to 430 area. But I think we need a major catalyst on this debt ceiling, these debt ceiling talks, to do that. Now, if the market doesn't care about all this stuff, and it's kind of showing us it doesn't really care much, then how much more can we go after it's all resolved? Initially it's a no-brainer that there's going to be some kind of spike. There will be a buying thrust. But how long can that go on? I think maybe not long. So I think we really got to be careful about buying into sort of a euphoric event like, okay, yay, the debt ceiling's behind us now. Let's buy. Because I think that will be short-lived. And we may see some sort of little pullback, and that's when we really know how this market feels going forward, is on that pullback after that little euphoric spike. So that's what I'm looking at going forward. I am bullish, but I'm cautiously bullish, and I think we could see a little bit of downside before we see more upside. All right, let's move on to the Qs. These are looking great. Look at the move this has had. Beautiful in here. This had a little bit of tiny. This is a tiny pullback on Friday. This is nothing. This deserves a break here. But look, we got up through this pivot on Thursday. We got up through this pivot really nicely. This pivot goes way back to August, but where we're sitting right now goes way back to April of last year. So over a year since we've been at this level. This is fantastic. Really liking this price action here in the Qs, and I'm even really actually liking the price action in IWM that has really been suffering. Is actually not looking that bad. Now, we are still in this range, fairly wide range, still in this consolidation here, but we've made a double bottom here. We've come up. And we've come up to these highs, the top of the range. We did that on Friday when everything kind of fell apart in the debt ceiling talks and pulled back. No surprise there, and not a surprise that the Russell was the weakest of the bunch on Friday. But we did manage to find support, and look at this support resistance line kind of through the middle or in the top third of this range. Found support there for now. So if this can hold, that would be quite bullish in my opinion. And I would expect the next move up to the top of this range to actually go through the top of the range. Looking at the volatility index, and this to me is surprisingly low. Look where we're at here. Yeah, it went up a bit on Friday, but not that much. This almost makes me want to buy volatility, considering what's going on. This would be a pretty decent hedge, is buying some volatility down here, because if talks did fail again, we would definitely see some downside in the market, and we've got to be seeing volatility go up. Although as a hedge, if you're looking for a hedge, I think a better one would be buying puts on 10-year treasuries. Now here's the yield on the 10-year note. Now I'm not saying buying puts on yield futures. You would want to buy calls on yield futures, because if things start to fall apart and the U.S. starts to default on debt, or just starts prioritizing which bills to pay, that puts a lot more risk into the bond market. And when the bond market gets risky, right, yields go up. Because if you want to sell some treasuries, if you want to sell some bonds, you've got to be paying high interest on those to entice people to buy them, to take on that extra risk. So we could see a big spike up in here in yields. And a spike up in yields corresponds to a lower price in bonds. So buying puts on 10-year bonds, 10-year notes could be a really nice little hedge against all of this, but I'm not entirely sure that it's necessary. It is a bit of a black swan event, so you can probably buy reasonably inexpensive insurance against it, but you should expect that insurance to expire worthless. Nonetheless, I think that we are going to see, as we've seen over the last week and a half or so, as we get closer and closer to the deadline, I think you're going to see these yields continue to rise. Whether they come up above this 4 level, I don't think so. I think that things will be resolved before then. But if there is no resolution, we could see them move up really quickly and even through 4. So there you go on that. Let's take our dollar index. We can see that has been moving up as well. Now, that has moved right up into very strong resistance here. Look at the support resistance line. And this one goes way back too. Really, really strong support resistance line. It does get through it, but after it gets through it, it flips the other way again. So I expect this to hold. I expect, and especially if everything sort of resolves, this should roll over again to the downside, I think. Let's look at our dollar cost averaging system. Let's start with the SPY on this one. Nicely green. It's been green for almost 2 months now. No sign of that changing. All systems go there. Same with the Qs. Even greener really. And IWM, of course, is still red. But looking like it's not going to take much from here to turn this up and turn this green. So if you're dollar cost averaging into the indices, SPY and Qs, yeah, keep going. IWM, we're probably getting close. Those small caps, probably getting really close to being able to dollar cost average into those again. All right, let's move on to our global indices. Here we go. So this is all world, the all world index, all equities across the world, across the globe, except for the United States. And you can see that this has just been going sideways. We are, into 6 weeks at least of sideways price action here. I think when the debt ceiling thing gets resolved, we may see a move out of here. As funny as it sounds, with the risk coming from the United States, people don't want to move their money into global equities. They don't want to move their money into emerging markets. They don't want to move their money to Europe, because even though the risk is in the U.S., it's sort of a global risk event. And that's why we're seeing this just go sideways. And I think that we could take a lid off of this once that debt ceiling is resolved. No pun intended there. EFA. This is Europe, developed Far East and Australia. And look at, this is, been in a really tight range here and looking like it's ready to pop. But it needs a catalyst. It needs a reason to pop. Emerging markets, ex-China. Look at this. The way this is consolidating. It's just a thing of beauty here. Again, how does this not pop? Look how we've had this wide year-long consolidation in this, and in the recent past we are getting tighter. The consolidation is starting to move up within the bigger consolidation, getting really tight, and just ever so snuck out the top of that, right? But this is within the margin of error on drawing these lines, right? So, but this looks nice. This looks like it's saying, hey, something's coming here, and we're going to move up and out of here. I would be shocked if this doesn't break out of this week even. China. FXI, Chinese large caps. Just nothing going on here. We've got strong support, sideways action, but it doesn't even really look ready to break out to the upside like some of the other global indices. So I think we can ignore that for now. Let's take a look at gold. So gold is saying, hey, the world's not coming to an end here. Gold is not afraid of these debt ceiling talks. Except maybe a little bit on Friday. But I think what gold is giving us here is, I think that we're going to move into a bit of a range here on gold for a week or two. Gold does like to have some movements and then pull into a range, as you can see numerous times on this chart. And I think this is the beginning of the next range. So nothing to be done in gold for now. The miners aren't really giving us any new information either. Silver. Silver's maybe a little more interesting here than gold. We've come down to a support level. This is an important support level too, and bounced a little bit off of there on Friday. So this is maybe already in its consolidation, and it's maybe just defined the bottom of the consolidation now, and you can clearly see where the top of that consolidation will be defined. Copper. Copper has been consolidating. This is a bit of a weird one because copper is usually fairly well technically behaved. You can see this important support resistance line, and that's actually been a really good technical line. And now we're consolidating right through the middle of that line. But this is a nice little basis building here. It is a little bit bearish because we are in a short-term downtrend here. Bit of a bear flag, but this looks to me like the kind of consolidation this can bounce to the upside from. But again, I think we need a catalyst to get this going. That catalyst is debt talks. Oil. All right. Oil I don't like as much. I kind of, maybe it's a gut thing. I'm not sure. It just seems like it's going to roll over from here. Going to go test, I don't know if just the bottom, of this low here, or if it's going to come down lower. That old support support level there, or maybe even down to test these pivot lows. I don't know. This does not looking like a chart that's going to break to the upside here. And maybe what we're seeing down in here, maybe we're seeing them finally starting to refill the SPR. I haven't heard that they are, but in price action suggests that they could be doing this down in here. So we could end up in a really tight range. If they let it drop to 70, they refill a bit and they stop refilling when they get to 72. That's entirely possible. We could go sideways here for quite some time. Natural gas, on the other hand, this has got the makings of a nice looking kind of rounded bottom going on here. I think in the short term we've run into a little bit of resistance. Maybe we move higher to this $3 level. But look at that rounding bottom and look how many times it's come down and it's touched this level. I do think it's time for this to move away from this. So I'm a little more bullish on natural gas than I have been for quite some time. However, the overall energy sector, though, it just doesn't look good. These are not pretty looking charts here. This is XLE. This is the entire energy sector. I don't know. I don't see anything here that impresses me. XOP, the oil producers or energy producers. Again, firmly in a downward channel. Found some resistance at the 50-day moving average on Friday. Doesn't this look like this is about to roll over here and go test the lows out of this? Oil services. Same here. We've got a pretty decent support level here, and it keeps bouncing off it, but we just keep putting in lower highs here, and eventually this is going to break down, and this looks like it's going to break down soon. Look at, tagged the 21-day moving average and pulled back on Friday. TAN, solar. Individually, there has been a little bit of action in some of the names here, but again, lower highs, kind of rolling over, just doesn't look good. This is not a chart that looks like it wants to go higher. So therefore, I've found a nice little short in the energy sector. So we'll take a look at that a little bit later on. Let's move on to our major sectors. All right, consumer discretionary. You can see that we've been building a base here for quite some time. Had a weak little breakout of that. Kind of failed a little bit, came down into the shorter moving averages. You can see the 10-day and the 21-day moving average right there. And then had a really nice move away from those and confirmed the breakout, real breakout, right? I would have been happier if it had gotten up into this 154, this pivot here from before. Almost made it right there. Not surprised that we had this little bit of a red day. It's almost an inside day though, so no big deal about Friday. XLI Industrials. These continue to be kind of messy. Gapped up, I think it was Friday. Was it Friday, John Deere's earnings? Thursday or Friday anyway. Really helped these move up, but you can see a little bit of pullback intraday on Friday. I think we're just going to kind of see more messy out of these. But this is one area I wouldn't be surprised at some point in the future we see rotation into. XLF Financials. These have had, doing not too bad considering everything that's going on, right? We've pretty much put in a higher low here. We really need to move up and see if we can put in a higher high as well. But considering everything's going on, I'm okay with the way financials are looking here. If we look at KRE, the regional banks, that's where all the real action is. This is looking more and more like it's confirming a capitulation bottom here, right? Look at this. This thing just after falling out of resistance here just fell apart. And look at the volume come up here, and this nice reversal candle here with all that volume. And it goes up. It didn't get far, but but when it fell back down again, didn't fall all the way back down here, and started to move up. Not a surprise that it failed at this $40 level. So important to see what happens next. I think we've got more consolidation to do in this area. I suspect we don't go below the 37, or definitely don't get below this pivot. In fact, I'm going to put that right there as a pivot. I doubt we get below that. I think the worst is over here. But it doesn't mean I want to run out and buy this yet either. I think, it's possible we have a little bit of a pullback coming, and then maybe we start to move up, and then maybe it's time to start looking for some opportunities in this space. I'm not quite there yet. XLV healthcare, a little bit messy. Interesting couple of candles here on Wednesday and Thursday, but not great follow through on Friday. Now, extenuating circumstances and all of that, but this could have been a really good setup for a nice strong move, at least back to the top of the range. And now that's in doubt. So this whole sort of area, because you got buying wicks and then you got the big selling wicks. So this whole area now we've really got to consider sort of an inflection zone. If you're above this, and really it's the 200-day moving average, isn't it? If you're and the 50-day moving average right there, if you're above those, you probably want to be long. If you're below them, you probably want to be short. So I think it's kind of more wait and see there. XBI, biotech. Still in the upward channel. Channel's still working nicely, right? We had a test of that channel and the 21-day moving average on Thursday. Recovered from that, passed the test, right? Put in a hammer candle. But again, no real follow through on Friday, but that's more overall market sentiment and news driven, macro, rather than anything to do with biotech. XLRE REITs. Kind of trying to fall out the bottom of the range, but not going anywhere. Okay, that's fine. Nothing to do there. XLP Staples, kind of rolling over after failing to break out to new highs. And again, kind of cool with this. We got a couple of hammers though, so this will be interesting to watch. But actually, 1, 2, 3, not something you normally see. So it looks like, it's trying to put in a bottom. It is funny buyers when it reaches lower. But the buyers there aren't all that strong, and that's fine because this is a defensive sector. We don't want to see these defensive sectors doing really well. And then the most defensive of them all, the utilities, and this really pulled back. So this is not telling us that, again, just like gold wasn't telling us the world's going to fall apart, these defensive sectors aren't telling us the world's going to fall apart. These defensive sectors are telling us that there's going to be a debt ceiling deal, and we're not that worried about it yet. That could change, of course, but market's not so worried right now. Technology, our risk-on sector, right? Look at this. This is beautiful the way this broke out of here. Really nice move in tech. And now most of this is large cap tech, of course. The breadth is not great, but you gotta like this. Really nice move, and how far back do we have to go to see these levels? And I think it's back into April in this one too. Yeah, it is back into beginning of April. It was the last time we were up at these levels. It's really nice to see. Probably going to pause here unless we get great news out of this meeting with Biden and McCarthy on Monday. But no reason to think that this is going to roll over or anything like that. I think we get a little pause. Maybe it sets up a nice little bear flag that we can play. Communication sector, much the same thing. Nice move out of strong resistance here. Look at this, right? It's taken more than a year to get back up to these levels, or I guess we're back here in June. Okay, actually, yeah, over here. No, this is May, so about a year. This resistance level here is been attacked for quite a while. Strong resistance, got through it. So far holding it. This looks great to me. Semiconductors. This is awesome what's happened here. Although, this is, if you've been looking at any of the plays, there were lots of plays in this space. This has been a really long time coming, as well as we go back even farther to get to these levels. We'll be back into March, April 1st area of last year. Really nice move out of here. But if you're looking at these plays, a lot of them have run really nicely. This move, it needs some time to rest. This should have been a really obvious move for everybody, an obvious play. Look at how this started to tighten up in here, and then when it breaks out and it just goes. This probably draws a bull flag here and gives us a chance to get in. And when you look at a bunch of the individual names like AMD, same sort of action, right? Look at, it had a move, drew a bull flag. It's had another move, probably going to draw a bull flag. This gives us a chance, these bull flags in something like this, give us a chance to get in. Now remember, NVIDIA's got earnings coming up, we can't really play that right now. But, watch out for after earnings. We could see another really nice move. And I think that maybe the reason that NVIDIA hasn't gone up as much as, say, AMD is because it's got earnings coming. Where am I? Okay, yeah, Netflix. This has, this move on Thursday, man. What a move. 11% I think it was. On just some their ad service subscriber increase or something like that. It seemed overdone to me. It seemed like a kind of a small piece of news, but the market really liked it. Moved right up in that resistance zone though, and now pulled back a little bit. And again, maybe we get a little bull flag here right under this resistance zone. Oh, I'd be all over a breakout of that. Google. Okay. Big move here. I mean, how much? This is a huge move for Google. Remember, Google has an ATR of under 3%, right? And this move in Google, say from this breakout point right here up to there, that's 17% over the course of about a week and a half. That's a lot for a stock with an ATR of 3%. So this got up into that resistance, and this resistance goes way back to, again, here's another one in April, that it tagged that and pulled back. Not too surprising. It may have another pullback day tomorrow. In fact, this almost definitely will have a pullback day tomorrow if there's any trouble in this debt ceiling thing. Could be a little quick intraday short, perhaps, on a pullback in here. I'd be really afraid to hold this overnight as a short. But I think that there could be a decent little short here. I'm probably not going to play it. I mean, you've got to be a guy who loves shorting, or a girl who loves shorting, to take that, I think. But if this sort of trade suits your personality, I think keep an eye on this one. But again, it's super quick, and I think it's half a day or a day and a half at the most. Microsoft, nice move here. Nice little consolidation it broke out of, sort of ground a little higher. We've got this resistance level here that it got through from this pivot here, and you can see a couple of double top there. Got through it. Does it hold above it and then go some more? Kind of looks like it will. The reason I'm not as bearish in the very, very short term on Microsoft as I was on Google is because, look, this is grinding up. It wasn't a giant move like Google made. Tesla. And Tesla's also grinding higher. It's had a few nice days. I believe it was Wednesday or Thursday, I think it was. They had their shareholder meeting down at Gigafactory, Texas, and they've been, moving up since then, grinding, but at least this is moving up because it was looking pretty bad, looking pretty bearish in here, but it's managed to kind of recover without even filling that entire gap. So yeah, things looking better for Tesla, but still weak. I mean, if you compare this to some of the other moves, this one is weak, and I think there are still better areas for us to be in. All right, let's move on to some of the plays. We'll start with HIMS. There's been some developments here. So they had earnings. back here. They gap down on these earnings, less than thrilling, I guess, on the earnings. Gap down through some moving averages, and started to consolidate in here. That was looking fine, and then on Thursday rolled out the bottom of this, broke down through the 50-day moving average that had been quite supportive. Moved down to the top of this old consolidation that we'd broken out of here, and held. And then on Friday said, not going to hold this anymore. Came right down here, but notice interestingly, there's this volume node right here, and it paused right there. I think on Monday, we're going to see this move down even farther. We're going to come down to the bottom of this range. We've got the 100-day moving average here. That should hold as support, but we might see some capitulation here. We might really scare some bulls out of this. It's already scared me out of it. I got out of it on Thursday. I held through, this move, this earnings move down. I was quite happy to see where it was finding support there. I thought, okay, let's take a look at this. But then once we broke below that 50-day moving average, and then more importantly closed below it on Thursday, I exited my my calls on this. Now I've had a position. I had leaps. My calls started as leaps in this, so I've had these for a very long time, and I've sold a bunch of them along the way here on the way up, and I had the last little piece left, and they're running out of time. They're 6 or 8 weeks. I guess it's 8 weeks actually from expiration now. As we start running out of time in these, then the value starts to bleed out of these really quickly on moves down like this. So I decided that coming into the close here on Thursday, that it's time to get out, time to exit the last of that position. And it was a very profitable position. I loved the way that played out, but it was time to go. And I will be keeping an eye on HIMS here for a bounce. Reevaluating what's going on and seeing if maybe I either buy some more leaps, or do I just buy stock. It really depends on what happens over the next couple of weeks here, because it's really got to hold this support level. It can spike through, and I think there's a good chance it does spike through and gives us capitulation, like in what was the one I was showing you earlier? Sorry, maybe it'll come to me before we leave HIMS here, but it was KRE. When KRE is coming down here, right? You see some similarities here in this chart. If we wind back to say here, or here, right? Do you see some similarities there? So what I mean is, where KRE should have found some support there, it didn't, right? It came down even farther. It came down to the next support level and had that capitulation sell-off here and rebound. And buyers came back in. And I think we could very likely see something similar in HIMS, where it should support there, but doesn't. We get a spike down to here and a reversal. And then it starts to move back up. And then we're probably going to look at another consolidation like this in this area. Now, if it doesn't do that and keeps going down, well, then there's something seriously wrong happened to this company. We've got to question whether we want to be in that at all, or even considering, buying back into this. But getting a little ahead of myself there. We've got a few more days to kind of figure out what's going to happen here. It hasn't resolved yet, but it's going to over the next couple of days, I think. All right, let's move on from HIMS to Pulte Group. We had been looking at this in this consolidation right here. We had a nice little breakout of here and just grinding higher. Nicely behaved. We had a little bit of a pullback to the breakout level, but look at. This is not closed below this 10-day moving average since back here in April, and it's riding right along that. We had a little pullback on Friday. We should expect to see this move out of here again. And this could, if you like this space, the home builder space, you know, maybe this red candle here is giving you something to work off of. You know, you could buy a break above it, which is the all-time high is the day before. Buy a break above there with a stop just below, or just below this 10-day moving average that has been so well behaved. I would do a stop on close on that, but yeah, this is not the greatest setup, but does this not look like a stock that just wants to grind higher? And sometimes you got to hold your nose and just get in. So that's Pulte, a setup to the long side, or still set up really to the long side, right? Uber is one that we had looked at. We looked at this flag here. Now it wasn't a great flag. I would have liked to have seen that set up longer and tighter. It broke out of that, and it didn't do very well after breaking out. It pulled back, and look at it, pulled back to the apex of the flag, and that's on pullbacks is normally what happens, right? Bounced right there. That's well behaved, nice technical action, and then you get this really nice move right back up into resistance again. Couldn't go further on Friday, but didn't totally fall apart either. So I think this is worth a watch here. This is kind of another setup that we're seeing. I'd like to see it consolidate a little longer, but I mean, it could just go here. And you've got a nice candle here to work against. You know, if you wanted to buy the breakout above that, you know, with a stop just below, that's nice tight risk reward there, really tightly defined. Okay, let's move on to a couple of new ones. This is Valero Energy, and this one is a short. So we had this big move down. Let's move farther out to get a bunch of context here. I mean, does this not look like big stage 3 distribution, and now we're moving into stage 4 decline? Yeah, not looking healthy for this stock at all. So we've got a big move down, put in this bear flag that is a rising wedge. So not only is it a bear flag, it's a rising wedge, both bearish setups. You can see in the bottom here, we've got this weakness compared to SPY. I'm expecting to see this break out to the downside. Whether that does that immediately or takes a couple more days in here, hard to say. Maybe it's got to go up to the top of this one more time. Tags the 21-day moving average. I may even short it if it did that. If I did that, if I shorted it up here, I would do it with really tight stop, and maybe even expect to get stopped out, but thinking, hey, it's worth a try. But the real play is when it breaks out the bottom of this flag. And it could move really quickly down to, so what is that level there? That's 110, really quickly down into this 98 level. So I think that could be a fun little play there. But you want to see energy coming apart as well. We need more than just a stock breaking down here. We need like either oil or gas, ideally oil breaking down. We maybe even need to see some demand issues in the energy market as well, and that would make this a fantastic short. Next short we want to look at is CROX. So these guys had earnings. Look, I mean, they had a really nice move up. And this stock is often kind of all over the place. You can see this as those shoes go in and out of style, right? It seems to be sort of this recurring fad thing. And I think we're on the backside of the fad on this one, to be really honest. And maybe I'm a little biased because I think they're the ugliest shoes in the world. But there you go. We've had sort of this uptrend, flattened out here, had a spike up going into earnings, and then fell apart on earnings. So the market was expecting good things out of this company, didn't get what it wanted, and it fell apart. It came down. It found some support where it should have, right? And it looked like, okay, maybe it's going to recover. And then I don't know what happened here on Friday. This must have been, I haven't had time to research this yet, but this must have been news related. We got really good volume on that breakdown, and even a gap down there, right? This really suggests this continues to the downside. And this pattern here measures out to this $80 level. which also corresponds with what should be a nice support level. So I will take a $30 move down in this. Now there's going to be some pauses along the way. We've got the 200-day moving average to get through first. Almost a no-brainer that there's going to be a little bit of a pause there. I will take a little piece of my position off as we come into this 200-day moving average. And then I might look to add to it again as it breaks down through the 200-day moving average. But I should have drawn this line in. Sorry about that. Because that also corresponds with a, this sort of area in here, should be a support zone, and that's right at that 200-day. So watch out for that. But still, even a move from here where we're at right now, 109 down to 102, 103, it's a nice little move because it probably happens in a day. So I think this could be a decent short here. And a bit of a longer term short as well. So maybe it's something you might want to do with puts. I haven't looked at the what the volatility level on puts looks like. If the IV is high or low. I suspect that the IV is chilled out a little bit after earnings. So yeah, maybe puts could be a good play here. I'll have to look at that a little deeper when the markets open on Monday. So that is it. That's all our charts, everything we wanted to look at. I forgot. I'm sorry. I forgot to update the market regime tracker. Okay, ignore the 0 right here. We are at 4. Okay, so we have been in this compression zone really for a couple of weeks. And we have now, over the last 4 or 5 days, moved up into a 4, and it's threatening to continue higher into a stronger bull trend. And all right, what do we got coming up? On taking a break on Wednesday. No ticker talk on Wednesday for our members. And next weekend we will have the market briefing update. I may release that, or I might not do that video until the Monday, which is a holiday. The markets are closed. And then the Wednesday after that, then we've got ticker talk again for our members in the Discord. Check the link below. Come join us in the Discord. We'd love to have you there. Really good group of people, and watching for trades, short-term trades all the time. Yeah, get in there. You're missing out. So I hope everybody enjoys the rest of your weekend and has a great week. And we will see you all again soon.